And finally, let's take a look at the stock markets, which held steady on the day of Operation Sindoor, but have since come under pressure as geopolitical tensions weigh on investor sentiment. India's benchmark indices, the Sensex and the Nifty 50, closed lower today. The BSE Sensex was down by 880.34 points, or 1.10%, ending at 79,454.70, while the Nifty 50 fell by 265.8 points, or 1.10%, this to settle at 24,008. Now, most sectoral indices, including the financial services, healthcare, power and IT sectors, traded lower during the day. Volatility also surged, with the India VIX, often referred to as the market's fear gauge, hitting over 1 month high in its 8th straight session of gains. Now, this is in stark contrast to the numbers on the 7th of May, when India's benchmark indices closed slightly higher. The Sensex closed at 0.13% up, while the Nifty 50 closed by up to 0.14%. So what's driving today's sell-off? First, of course, is the rising tensions between India and Pakistan. Experts say that the market has turned highly volatile after India's drone strikes, and there are growing fears of a wider conflict. Second, no concrete outcome yet from the ongoing India-US trade talks. And third, the rise in US dollar rates. The dollar is on track for a weekly gain against most major currencies, as a US-UK trade agreement raises hopes for progress in the upcoming US-China talks. Yet not everything was in the red. India's defense and drone stocks soared through the day, driven by expectations of higher order flows amid rising tensions. Experts believe that this sector could see sustained momentum in the near term. Meanwhile, across the border, Pakistan's stock market saw a partial recovery today. After 4 days of losses, the index surged up to 2% in early trade before settling lower. Just yesterday, the Karachi Stock Exchange 100 index dropped by over 6% in a single session. Still, analysts say that Indian markets are unlikely to see major outflows, thanks to hopes of a trade deal and the strength of the country's economy. Historical data from the past 2 decades also shows India's markets typically rebound quickly from geopolitical shocks, with little lasting impact in the long run. So while today's sell-off reflects short-term fears, history shows India's markets don't stay down for long.